All right, let's get right into it. Today, we are going to learn how to cut through all the noise, the headlines, the talking heads, the endless expert opinions. We're going to focus on the one thing that tells the unvarnished truth, the price chart itself. The goal here is simple, really, to learn how to read what the big institutions are actually doing with their money, one bar at a time.
You know this feeling, right? One minute, you're worried about inflation. The next, the Fed says something, then there's a huge market rally. Oh, wait, no, now the tech bubble is bursting. It's just this constant flood of information, and most of it conflicts. It's no wonder so many traders get stuck in this loop of just feeling confused, anxious, and overwhelmed. And here's the kicker, from one of the absolute masters of this game, Al Brooks. He says that the very tools most people use to try and make sense of it all those fancy indicators and oscillators, they don't make things clearer. They actually make things murkier. They obfuscate. Because, they're just old, lagging reflections of the one thing that really counts. So yeah, that's the problem we're up against. We're drowning in market noise. And look, this isn't just a small issue. It's the main reason most people struggle. But price action trading, well, it's designed specifically to fix this. It's all about finding that one clear signal in the middle of a hurricane of chaos. So if all that stuff is just noise, where's the actual signal? Well, that brings us right to the core belief, the absolute foundation of this whole approach. The chart is the truth. And that's not some catchy phrase. It's a fundamental reality. Because at the end of the day, the chart is the only thing that can give you money, and it's the only thing that can take it away.
Think about it like this. Every single bar on that chart is like a footprint left in the sand. It's the footprint of smart money. It shows you exactly what the big institutions, the ones who actually move the market, are doing, not what some CEO is saying on TV. We're basically learning to be trackers, following their trail.
And don't for a second underestimate who's leaving those tracks. 90%. That's roughly how much of the trading volume comes from institutions. We're talking pension funds, massive hedge funds, super fast algorithmic trading firms. Us, the individual retail trader, we are statistically just along for the ride. Our job is to ride their wave, not fight it. Now, these institutions really break down into two main groups. You've got your traditional, long-term players. Think of them as setting the final destination, kind of like that road heading off to the mountains. But then you have the high-frequency algorithms. They're the ones that decide the crazy, chaotic, zigzag path the market takes to actually get there. The chart shows us the combined result of both. So when we say price action, what do we really mean? It's simple. It is any change in price. On any chart, any time frame, right down to the smallest possible move, a single tick. And why does every little tick matter? Because for that tick to happen, an institution had to be on one side of that trade. It's never random. It's always a clue. Okay, so we now know who is moving the market, and we know what to look at, the chart. So that brings us to the fun part, decoding the institutional playbook. It's time we learn how to speak their language. And believe it or not, their language starts with a really simple alphabet. It only has 2 letters. First, you have a trend bar. See that big body? That screams certainty and control. One side, buyers or sellers, was totally in charge. Then you have a doji bar. The small body tells you a story of uncertainty and balance, a real battle where nobody won.
And if those bars are the alphabet, then this is the grammar. And again, it's simple. The market is always in one of just 2 states. It's either in a trend, which is all about inertia, just pure momentum, or it's in a trading range, which is a state of equilibrium, of balance. That's it. Your first job is always just to figure out which state you're in.
So how powerful is that inertia we just talked about? Well, this number, 80%, should tell you everything you need to know. About 80% of the time, any attempt to reverse a strong trend is going to fail. Just let that sink in. Every time you try to pick a top or a bottom because it feels like it has to turn, you're making a bet with an 80% chance of being wrong.
All right, this leads us to what is probably the biggest and most seductive trap for almost every trader out there, the news. If you're basing your decisions on headlines, you are being played.
This quote just says it all, doesn't it? While you're sitting there trying to decide if the Fed's statement was hawkish or dovish, institutional algorithms have already read it, processed it, and placed their bets in literal milliseconds. The price bar that forms right after, that is their final verdict. The chart is the only interpretation of the news that matters. So let's look at a classic case study. Costco. They report just blowout earnings, up 32%. They crushed all the analyst expectations. So naturally, the stock gaps way up when the market opens. For a trader who follows the news and fundamentals, this is a no-brainer. You're hitting the buy button as hard as you can, right? So, you've got this perfect, beautiful, bullish news story. You've got the huge gap up confirming it. What do you think happened next? Where did the price actually go?
It plunged hard. It reversed almost immediately. The chart showed very clear signs of rejection. So why? Why would it do the opposite of what the news said? Because the institutional consensus was, nope, this has gone too far. They used all that excitement from retail traders as a perfect opportunity, as liquidity, to sell their shares at a fantastic price. The chart told the real story.
And if you think that was wild, look at this one. The news story was an earthquake. Microsoft is bidding to buy Yahoo. It's a sensational headline, and for most people, it feels like a done deal. But what was the chart's reality? Well, if you just zoomed out to the weekly chart, you'd see it was in a massive long-term bear market. That huge gap up wasn't a new bull trend. To a price action trader, it was just a gigantic bear flag. The bigger trend, that downward inertia, was dominant. And sure enough, by October, the stock was 50% lower than the bid price. So we know who moves the market. We're learning their language on the chart. But there is one last piece to this puzzle. And honestly, it's the hardest part by a mile. It's about mastering your own psychology. And this is the central paradox you have to get your head around to succeed. If a trade feels easy, if it looks clean, obvious, and comfortable to take, it's probably a trap. The best, most profitable moves are almost always born from uncertainty. They're designed to feel scary. That's what keeps most people out. And these are the mental traps your own brain will set for you. Fighting a trend because it feels like it's gone too far, that's just you ignoring that 80% rule we talked about. Getting what feels like a bargain price on your entry, well, that usually just means the institutions are thrilled to be selling to you right there. And moving your stop to break even way too soon, that's just fear shaking you out of a perfectly good trade. You have to learn to trust your plan, not your gut feelings in the moment. Because in the end, just knowing this stuff isn't enough, not even close. Trading isn't an academic subject. It's a performance discipline. It's like being a concert pianist or a pro athlete. You have to develop the skill through hours and hours of relentless, consistent practice, especially when you're under pressure. So I'll leave you with this question to think about. We've established that the truly great trades, the ones that can really make a difference, are usually the ones that feel the most uncomfortable and uncertain when you're about to click the button. So the real question is, what are you going to do to build the conviction, to build the discipline, to actually take the next great, scary setup the market gives you? Because mastering the chart is really about mastering yourself.